Cameron for Cam's Mortgage Minute on Friday, May the 10th. Hey, CMHC came out with some recent, their report, and according to the results, they said that their bulk insurance stood virtually at a standstill at the end of 2012 as compared to where it was previous years. CMHC attributes this to their strong underwriting practices and sound mortgage loan insurance portfolio is what they're attributing all this to. And their total insurance that's in force stood at $566 billion at the end of December 31st, 2012, virtually unchanged from the beginning of the year and within CMHC's $600 billion limit they had set. Now, CMHC may be celebrating this, but there's some investors who are less than thrilled with it. They point to the challenges that many have had in winning low-ratio mortgage loans, as some lenders, as compared to some other banks and lenders, who've had access to the mortgage insurance because they've had a lot of conventional insurance. Now, what you have to understand is that CMHC was originally intended for high ratio mortgages. That's where you're putting less than 20% down. But as I talked to you a while ago on another Mortgage Minute, some of the lenders that are out there, some of the banks and institutional lenders are bulk insuring conventional mortgages. And because they've been doing that, that caps out what CMHC can do, limiting that high ratio market, which CMHC was all along intended for. The government decided to ration the lender use of that $600 billion fund last year as a way of slowing down the market and lessening the threat of household debt. This was their clawback mechanism, and they were saying, look, we're not going to increase it, we're not going to up the ante here so more and more of it goes out, and this is the way we can control it. However, what they've seen out there is obviously a slowing down in the mortgage marketplace, and that's what they're attributing to it. They also meant that with all of these changes and the tightening up of CMHC's lending policies, the investors found that the business for self programs they had relied on before were pretty tough to get insured through the insurer. And I can tell you that firsthand, that if you are self-employed, it's a little more challenging. It's certainly more than it was last year. Not impossible, but certainly more challenging. And basically it allowed CMHC and other folks to not have to go after that business, and it's made it tougher, and overall CMHC's exposure to that side of the business has dropped. Now, many lenders that had strayed away from doing that type of business and other business that CMHC was not insuring are slowly coming back to it as they're realizing it's affected their bottom line, and they do need that type of business in there. Now, it's their overall losses, according to this report, are have been in line with what it should be according to compared to Genworth and Canada Guarantee, the other two insurers. So overall, CMHC feels that they're doing a pretty good job. They're looking after the funds and they're stewarding them well. But again, as you might have heard out there, there's been some recent rumblings and gripings about CMHC, and some changes are imminent, and we'll talk about that next week, or at least they're certainly proposed and underway. But bottom line, it looks like the numbers remain virtually unchanged. The bulk insurer keeps on going, and we'll see how the housing market unfolds. And it'll really be interesting by the end of 2013 to see how those numbers relate in comparison to 2012 and then the previous year. Anyway, it's been Cam for Cam's Mortgage Minute. I look forward to, we look forward to helping you here at the Auxilium team. If you need anything mortgage-wise, it's whether it be a CMHC insured mortgage or a conventional mortgage or whatever, give us a shout. We're always ready, willing, happy to help, and enjoy your weekend, and I will see you on Monday.